Hi, so in this video we're going to take a look at some of the most important items of economic data. So we're at the beginning of October. Usually what that means is the first Friday of each month we have something called non-farm employment change. So let's just have a quick look at it. So we're on Forex Factory. There's other calendars we can look at. And what we've got here is average hourly earnings, non-farm employment change, and the unemployment rate in the US. So they're expecting 169,000 jobs being created. That's versus 187,000 jobs created in the previous month. So what does this all mean, and why is this important? Well, this is one of the most important items of data in any month. The reason being is that the FOMC, so in the US, their job is to they set interest rate decisions and so on based on the controlling of inflation or price stability, but also to foster full employment. So employment data in itself is extremely important. So what does this mean to us? Do we need to worry too much about whether it's more than 169,000 jobs or whatever? Not really. As traders, our interest in this item of data is more so in sort of two ways. Number one, if you're a swing trader, what you need to think about is what are the most important items of data in any week, and should I be closing my trades in those related markets? So as a swing trader, when you're holding trades for a few days, do you want to be holding a US dollar currency market, so euro against US dollar or pound against US dollar, into that data number? Possibly not, particularly if you're quite risk averse. Do you want to be trading the Dow or the S&Ps or the Nasdaq into that number as a swing trader? Possibly not. That's a decision that you would have to make based on your aversion to risk. But it is quite an important item of data that is likely to create some movement in the market, because if the jobs created is more than or lower than that number, then it's likely to create a movement. The big pension funds, the hedge funds of this world, are going to reposition their portfolios accordingly, and that could lead to any profit that you might have open suddenly being wiped out, and it's kind of in the lap of the gods in many ways. So that's something very much to think about. The other thing that we're quite interested in is interest rates. So we've got a couple of interest rate decisions this week. So we've got the Reserve Bank of Australia and also the Reserve Bank of New Zealand as well. So that's already happened, and they've decided to keep interest rates on hold. With Australia, again, that's could lead to quite a significant move on the Australian dollar. So going into last night, our members were taught that be aware that if you've got any Australian dollar currency pairs open, you might want to consider closing them. It is ultimately individuals' decisions, again according to their aversion to risk, but it is something that could create big shift and movement in that particular currency. Similarly for tonight, New Zealand dollar or New Zealand, we've got their interest rate decision also. That's for swing trading. Be aware, reposition, close out accordingly. As a day trader, so when you're looking to be in and out of trades over a few minutes, maybe to a few hours, it's usually one of those things where you probably want to be closed out into the number, but trade the markets thereafter. It's a little bit like throwing a rock into a pond. It's going to create all sorts of maelstrom at the beginning, and huge sort of ripples and waves. You don't really want to be in the pond at that point. Okay, so you want to close out. It represents risk that's unnecessary for day traders. However, if you think about what happens after that, the ripples then start to creates movement, doesn't it? It creates opportunity, and then you're looking to then trade the ripples. So as an intraday trader, from 130, so from 132, 134, and so on, that's when we're going to be very interested in day trading those US markets, as we trade the increase in volatility or the reaction to the announcements as it comes through. So the most important data items: interest rates and non-farm employment change, and we've got a few of those this week. All the best, happy trading.